Hello, everyone, and welcome to episode 3 of Microcap Mania. Today I'm going to be going over UltraLife Battery Corp. And UltraLife, it IPO'd in 1992, and it's in the electrical equipment sector, and it manufactures and sells products for power solutions. The two primary segments that make up its operations include battery and energy products, and then also communication systems. So, in the battery and energy product segments, this includes their lithium 9-volt batteries, their cylindrical batteries, thin cell, and other non recharging batteries. They also have rechargeable batteries. They have uninterrupted power suppliers and power charging stations. And then in the communication system segment, it includes radio frequency amplifiers, power supplies, cable and connector amplified speakers, equipment mounts, man-portable systems, and integrated communication systems for both fixed and vehicle application. So actually, just to give a heads up, Ultralife Corporation, they just put something out 3 days ago that their most recent 10K is going to be delayed, and this is because it just acquired Electrochem. I think that's how you say the company. They're big fan of acquiring smaller companies. In the past few years, they've acquired 4 of these, and so it's going to be a little bit delayed so that they can get all the relevant info from their audit onto this 10K. Typically, that's a red flag, but with the acquisition being again the last day of October, this kind of makes sense. So, a lot of the information I pulled is going to be from last year's 10Ks and, of course, the investor presentation, which I took some of the slides that I think really emphasize some of my key points. But last year's revenues jumped 20% to 150 million, with 8% jump in revenues to the battery product segment, and then 142% in revenues from communications systems. And Ultralife is really trying to transition from originally at IPO, it was almost 100% for military and defense components, and now it's almost towards 60-40 with a lot more into medical. And they're definitely one of the smaller players in their space. They're still a niche company. Their market cap is around 100 million right now, but they've been trying to grow their margins. And really, a lot of this thesis is going to boil down to if they can fix their margins, as we'll go through in a little bit with that. So, really quickly, break it down. I wanted to try and talk about the investment aspects first. So, as I mentioned, market cap almost 100 million. The income, 8.99 million. This is quite low considering that its sales were 165.15 million. And again, I'm going to try and not constantly bash the idea that their margins are terrible and they need to fix it, but this really stood out to me the entire time I was working through just how hard it is for them to derive profits. And that's something even the management team has talked about. But going back into it, a price to earnings of 11.07, price to sales of 0.60, which is actually really attractive, and a very attractive price to book ratio. Its quick and current ratio are quite good. It does have some debts that are holding it back. The management team in one of the most recent interviews said that their debts are holding back about 12 cents of their earnings per share, and that's why you see a substantial jump when you look at earnings per share to next year earnings per share as like the little estimated thing. But again, you can check over and see on the graph where their revenue actually comes from, with a large portion of that being their battery and energy products, and then only 15% being their communication services. And then also you have revenues by segment, which I think is really important to point out because, again, they originally started at almost 100% in government and defense, and now they're really trying to diversify out again with some of those key acquisitions. They're trying to make more of a push into medical and healthcare. And then also for the investment highlights from their page, going over those quickly, it has a very diverse portfolio, as you can again reference the revenue segments. It has a management team that really prioritizes insider ownership and has actively been buying shares of its company. One thing I do want to mention though is that since IPO, the stock itself has not done very good, and we'll go into a little bit more with that with my final thesis in terms of buy, sell, hold, etc. But again, the price has definitely fallen a bit off of a cliff. Right now, we're at $5, and in the 52-week range at highs, it was all the way at $13, with a lot of analyst targets right at around $14. So we'll try and get a little peek into that. So I threw in this because I thought it was important to really kind of show the trends and also show where some of the problems arise. As we see, they've consistently grown revenues. That's not where any of the problems are. Their revenues are actually larger than their market cap, which typically you'd be quite surprised to see, and this would be a great indicator of, oh, they're going to do really well. But because they're a small player in a niche field, they can't get the supplies, and this was again mentioned in multiple interviews I saw with their team. They can't get the supplies at a rate that actually lowers costs. So instead, it's really eating into their margins and especially their profit margins. And that's why you see when you have 165 million in sales and only 12 million in profits, there's really only so much you can do getting such a small percentage. And for lithium batteries being their primary business, this really isn't attractive, as margins can go all the way up to 65%, and these are kind of not the best. So again, look for that to get fixed. For any of the forward-looking statements I've seen from their management team, they seem really, really focused on this aspect and trying to fix some of the supply chain issues. This is definitely a fixer-upper project. It's going to take a while for their margins to catch up, but once they do, I really think it's going to be a force. And again, I pulled some of their insider ownership things that I think really show how much they prioritize purchasing shares. As we can see, in 2011, they had a big sell-off, and this was kind of a good thing to see because their share price kind of fell off a cliff after 2011. But I know it's not quite as much as the over 36 million they sold, as you can clearly see, but they have been actively repurchasing shares and at opportune times and prices, and that's really exciting to see. So again, the insider ownership percentage, don't pay attention to this one. I just kind of wanted to show that another huge part of this is that institutions are buying up all of their shares, which I really like to see. But again, insider ownership, institutional ownership make up the two big shareholders of their stock, really. So, lastly, I wanted to go through some of their basically highlights from their most recent earnings before giving my final thoughts on Ultralife Corporation. So, revenue of 35.7 million was down from 39.5 million from a year ago. Operating income was $500,000. Earnings per share was 2 cents per share, and again, they've said once they can figure out their supply issues, that was covered a lot in this earnings report, was they're having supply issues, and that really eroded their earnings per share. And then of course you have their battery and energy products, which was up 31.9 million from a year ago, and then we saw decreases in the communication systems revenue. Gross profit was down almost 11%, which is not exciting to see. Gross margins were a slight decline from Q3 a year ago. Operating expenses were a bit more. Net income was not good. Adjusted EBITDA was not necessarily good. Backlog, yikes. Debt reduction. They've been actively trying to focus on reducing that debt, as that's something that also eats into their earnings per share. And working capital of 60.2 million, and they have a current ratio of 3.3, so they aren't worried about paying off their debts. This was not something I was expecting to necessarily see from their most recent earnings report. Originally, how I found this company and how I typically find these companies is I throw in a multitude of different things. Like I try and target low PE ratios, low price to sale ratios, and really try and run through screeners to find quality companies. And this is one that kept popping up in mine, and I was really intrigued to see just how bad it looked on the inside, but I also at the same time see where the potential really lies, because again, if they can figure out their margins, this is going to be a company that could really potentially be a player in lithium batteries in a very much expanding business model that I really like. The only problem is right now is that they aren't getting, it's not as profitable as it should be, and that's from a multitude of decisions, but also supply chain issues that I think could get figured out in the near future. But I wouldn't feel comfortable at all giving this a buy recognition or a buy recommendation at this point. This is definitely a watch list and seeing if there's a solid game plan that comes out to fix the profitability. If not, this could potentially be an acquisition target from a much bigger player in this space if they're looking to pick up that niche. But this is going to be the first company on Microcap Mania I don't give a buy recommendation, and that's just because I couldn't come up with a thesis that doesn't get broken down by the lack of profitability that comes from their current business model and their current margins. The margins that they have currently is absolutely nothing to get excited about, especially in that space. Though, granted, it is an easier fix if they can figure out some of their supply issues and try and carve away at the market share, as they again are a very small company compared to competitors, and they're probably going to be overlooked if they do actually figure out their margins. So, definitely add this to the watch list because if there is a solid game plan to figure out the margins, this becomes a very good business model. If not, and there isn't really a solid game plan going forward, they're likely to just slowly die out. So again, thank you for joining me on this Microcap Mania episode. Again, first not buy recommendation. We'll see how that goes. But next I'm going to try and cover some market news and market outlook in one of my future videos. So look out for that. Okay, thank you.